I get it. Rates are really high. So why would you think about buying today? I've come up with 2 concepts and 3 strategies that you should understand, which I'll share in this video to help you make the most informed decision on whether or not you should buy in this high rate environment. Concept number 1 is the cost of waiting. Historically, and including this current high rate environment, home prices have averaged a 6% annual appreciation rate in Utah. That is more than 0.5% per month. Think of it this way. Let's say you're buying a $600,000 property. With these stats, that means that you're poised to lose up to $3,000 every month you wait to buy that home. And if you're renting, add the cost of rent to that cost of waiting every single month. With these stats, it's hard to argue that you can win by waiting to buy a home. Concept number 2, if you're considering selling your home to upgrade to a new home, but you're holding off because of the high rates, you could be missing the bigger picture. That is wealth amplification. Assume with the upgraded home, you're looking to spend an additional $200,000. With the same 6% annual appreciation rate, this means that you could earn as much as $12,000 every year added to your bottom line net worth simply by owning the more valuable home. This added wealth can help offset the temporary sting of high mortgage rates. Now on to the strategies. Number 1 is become your own bank. Because of home affordability challenges, most people believe that it makes sense to invest 100% of their available cash and equity from selling their home into the new home they're buying. However, I believe for most people, there's a more strategic way of using this cash. By paying off other more costly consumer debts and or setting some of this cash aside to subsidize your mortgage payment until a future refinance, you can make buying today more affordable despite the high mortgage rates. Strategy number 2, tax benefits. This is the literal silver lining of high mortgage rates. For too long, these benefits have been dismissed. Because mortgage rates were so low for so long, people weren't even paying enough in mortgage interest to exceed the standard IRS tax deduction. With today's high rates, this is different. Not only can you write off the mortgage interest you pay every year, but in addition, you can write off your property taxes and in some case, even the mortgage insurance you're paying on your mortgage. This will ultimately reduce what you pay in income taxes, therefore increasing your take-home pay after taxes, which can be used to help offset the higher mortgage payments due to the high mortgage rates. Strategy number 3 is negotiating power. In my 15-year career, I have not seen this much negotiating power for home buyers. In fact, it's arguably the best home buyer negotiating power we've ever seen, period. With this negotiating power, not only can you negotiate a lower home price, but you can also negotiate the seller to pay for your closing costs and even a buy down on your mortgage rate. Additionally, lenders have been forced to introduce market-driven financing incentives that you could take advantage of. These include waiving fees on a future refinance, lender-paid grant programs, and even lender-paid temporary rate buydowns. Best of all, these incentives from sellers, builders, and mortgage lenders are all permanent savings, unlike the temporary nature of mortgage rates, which will change every time you sell or refinance. Hopefully this information inspires some newfound motivation to more seriously consider a home purchase in today's environment. The fact is, this information only scratches the surface on all the information you should know to make a decision on whether or not buying is right for you. I would love the opportunity to help you learn more and investigate your options with a no-cost, no-obligation mortgage consultation. Simply scan the QR code at the end of this video or contact my team by call or text at 801-713-4000.